Okay, so yeah, this like these kind of a drawbacks, as a little bit of a it kind of shakes you out. Basically, just you you start the month here, nice, and makes a move all the way back up, and then you just just wash out everything at the end of the month. I don't know, it was a window dressing for to end the month. It happens a lot. Last day of the month is always tricky, you know, because a lot of these hedge funds they close their books, on the equity side and on the forex market as well. So they do kind of close out a lot of their positions and stuff at the last day of the month because they're gonna close out the book. They're gonna pay, they're gonna pay their investors. So there's a lot of bit of a action comes into a play. But okay, what it is, what it is. So let's keep moving. Um, well, we talked about this S&P before, so we're good there. Qs, I had the same thing here. Um, it's the same, it's exactly the same thing. It's the same drawdown that we had here at August low, wave one, wave two, and it's the same one, one, two. Okay, these are the projections that I have to the upside. But we need to find support here for Qs. So the point is any weakness in an S&P 500, okay, will trigger from here. Okay. So what does our Mag 7, all these stocks, is telling us? That's all we have. Forget about all the labelings and stuff. What do you see here? A round bottom. If this is gonna be, if this is a round bottom with a double top, we didn't make a new high, right? Almost what a point shy from all-time high. But if you noticed that NDX cash has made several new highs, not the Qs. Okay. Qs end up making a double top. If we will only use, let's say, a pattern, right? There's a lot of patterns that you could trade as well. Head and shoulders, inverse head and shoulders, cup and handle, you know, things like this. So what do we make out of this? It's just a round bottom with a double top. Okay. If this is the case for that, so what we could expect if we would have any weakness comes into a play, that would form a handle. We can easily make a case here that this is going to be a cup with a double top. And if they're going to have a further weakness that would come into a play like this, that will form a top for this. And then what do you think can happen? You can easily play a pattern back to the upside as well. You see this, if I draw and if I will show you any of the wave counts, we just talked about fifth wave being an ending diagonal, or if going to be it has to have five completed waves, smaller waves to complete one higher degree of five. It tells you from everything in this market, if is going to pull back either on elections with the whatever the thing is going to reverse back up. Okay, because there are several patterns, and I can show you so many of these charts that I am watching that are forming these double tops with these round bottom, these rounding patterns. There's so many of them are out there right now. So yeah, being in a position to take this punishment is gonna be a painful, and I get that. Okay. But if we go like this, I mean, it is possible, but I don't see the market is gonna form up top, being making a double top. Double top is gonna get broke. It's gonna be taken out one day. Okay. I can show you a history of an S&P and NDX cash and Dow Jones. No market tops has ever formed with a double top or a triple top. Okay. They're gonna get taken out. Look at gold. 3 years it's consolidated sideways. Look how it broke to the upside. I mean, same thing with the Bitcoin now. Bitcoin has been sideways for how long? And now it's breaking out. So there, it's these kind of a double tops are they do and end up gets taken out to the upside. And and if we go back here and Danny, yeah, mom is calling you. So then if we go here, it's the same thing. Okay, this is the same thing that I'm tracking it here. You always have to go to a bigger time frame. Once you're gonna have a clear read on a bigger time frame, is much easier to trade a smaller time frame. You cannot sit and fight your life over this if you don't know how your bigger picture looks like. This is the most important thing. This is where Elliott works the best on a higher time frame. Here is going to keep changing for you because these are very difficult to label. You need years and years of experience with an excellent track record to label these smaller waves. These ones are different. It could take time, and the point is like on this wave count, the time works really really good. Fibs works really good. I can make fibs work here as well. Don't get me wrong. Okay, I can nail a lot of these bottoms with those. A good. I can see a pretty good cluster of like fib support or a resistance. I can do that on a 1 hour time frame. But as soon as you're gonna go up to a bigger time frame, it's gonna give you a much clear, good read. It kind of gives you like, okay, you know what? Yes, I could expect the market has a lot more upside, and I do believe that market has a plenty of upside left. If market does pulls back 4, 5, 6, 7, 8% to the downside, doesn't mean it's gonna change this entire wave count. Absolutely not. Look how far we are. You know, I mean, timing works really good. Fibs works really good. This is why, I mean, I this takes time for me to keep changing this thing. Like, this is the four, this I put four here, then we look for a five to make, you just like always moving around this thing over and over again. And I don't like that, to be honest, because you in a trade and you enter a trade with a plan, but then when you in a trade and then you keep changing it, what is the point for it? Then why you are in a trade if you don't even if you keep changing your wave count? That's the answer I want to know. You know, like this one right there, I don't have to change anything for like months and kind of like several quarters because these are monthly bars. But the point is like if you either then it all comes down to like what kind of a trader you are. You know, if you want to adopt as a I want to be a swing trader. Okay, well, then we have to fight this if we're doing a swing trading. We have to stay on a 1 hour time frame. Buy plenty of time ahead of on every trade. Okay, at least by like 2 months of 55 days is as you notice, like as I try to go out that much. Yeah, you pay a little bit more for the premiums because you are willing to buy a bit more time, but the premiums are gonna be pretty much the same, depends on what delta that you carry on your trade. And then I prefer to do more spreads is because I want to eliminate the time decay as much as possible. Because I don't, if the market has a bit of a weakness or whatever, the price is going to come back down. Okay, well, your position is down. It's just considered a paper loss. You haven't officially closed the position yet to take an, to take a loss. If the position is down 300-400 bucks, okay, it's down 300, but it doesn't mean that it cannot reverse or it cannot come back half of it for you in the next day or two. When you officially close the position, yes, that is your loss. If the position is down, it doesn't mean that, well, you taking a massive hit or something. Or you gotta have to make sure how you size your position. So at the same thing here, 5 completed waves in one, and then I will be watching 7.66% decline here in a wave two. Is for this smaller degree wave two to stay smaller than this. We don't want anything to get bigger. If it's starting to get bigger, then we're gonna have a problem going up. I can tell you that. And I know the wave count is gonna start to look a little bit different, and we don't want that either. We want to make sure our wave count has the right look. It's very, very important. Okay, the price is gonna make sense, and I will make sure that whatever the price that we do is like, you know, the the price has to make sense. So what we can do here is the same thing. We look for this wave two that is going to move against this trend wave, which is the wave one, is to see where we could find a potential support. So where we have our support 485, which is this. Why is this where we have this 7 point close to 8% drawdown? Okay, which is this 785. How low did we come here? 483. Support is where? 485.54. And we did get a bit of a pop right there. So now we just closed the session here yesterday. So can we come back and retest this thing? Or we kind of like break below the 483.75 low? Yeah, it is possible. So what will be our next fib? 38.2. 38.2 is a pretty strong support level that we always look for, right? And then if we look for 50%, which is 474, that means that this entire move from this low to here, okay, that cuts in half. This is a very good zone. And then the price will bounce from here one way or another. Okay, so it looks okay. I like these two wave count, and I have them both side by side exactly the same way. So if I am going to see weakness here, so the weakness is going to come into a mag 7 from where? From the big names. So which big names has to roll over? Well, Amazon is making new highs. Meta is good. Netflix had excellent earnings. Who left? Microsoft is a little bit under pressure. I can see that. So the Microsoft under pressure. What else we left? We have Meta is good, Amazon is good, Nvidia is fine. Um, Google did really good. I mean, Apple is okay. So how many names do we have that they're good? So I mean, I will show you the rotations and stuff in a second, but I'm not saying that we cannot have more downside. We can, but I mean, we could be corrections are so damn subjective, you know. We could be doing this. This is all of A, get the bounce up in B, then take a leg lower down in C just to complete an ABC move down in two. The point is like it doesn't matter how we come back down, is this is our zone. Okay, we have two zones. They call, fib support zone, and then we have an FRZ, fib resistance zones. So we have it. But the point is like we need to take out this high, 503 to 52. Okay. So this is where we have 15.90% decline. So this is the largest percentage decline. And then we have this one, which was 7.66% decline. That's all we had compared to these two. So now this wave one was 14.66 against 11.82. You see, wave count looks really, really good. Smaller degree is shorter than your higher degree. This is exactly what you want. You don't want these smaller ones gets bigger than the one higher degree. Your wave count is going to look a little, a little odd. It's not going to look right. This has the perfect look right now. Okay. It measures right. Fibs are good. And we just gotta have to see that where we're gonna find a turnaround. If we're gonna this is could be all we can just rip right back up. We don't know that, but we're gonna find out in the next couple days. And these election results are not gonna be finalized for weeks. Just keep that thing in mind as well. So I don't know how are they planning to keep this VIX elevated for another couple seven for entire November, I guess, or whatever the case is. I mean, then we're gonna have December, and then the year is gonna be over. That's it. We have 2 more months, so the year is almost gone. you know, I mean, we're talking 5 6 weeks left. You know, because it's when you're gonna go into like mid-December, you're gonna have people is gonna start going into a long vacations, and it's gonna be a holiday season. The holiday season volume just dries out. There's not these guys, like a lot of these guys are not on their desk. They're gonna be out, you know, doing all their Christmas shopping and gonna spend time with their families and just take time off. And then we're gonna have New Year's and that's it. So a lot of people they look for those Santa Claus rallies right after Christmas, but this it's those days, if you look back in December, is really not heavy on volumes. So we don't have we the year is I mean, I hate to say that, but I mean I really don't have to drink. I did good. And I hope you did well as well. But I know there's some guys there they just recently joined and they're and they expect like, hey, I wanna make the most that we can. I mean, you will, and I'll help you, but who's the guys who's been with me from the beginning of the year, I mean, they're they're happy and they're fine. So market is gonna open every day as always, and we'll just we're gonna see what we make out of it, and we gotta position ourselves from there. But you'll catch up. It doesn't mean that I'm not gonna trade next year or so. I'll be here. I'm not going anywhere. So it's the same thing here that I have, which is this five wave that I'm trying to count. I mean, I posted this thing back in $312 price, 60, that's almost around like 61% upside. I mean, you know, I I will repeat this thing again, and some of you probably know it before, is when you have a bear market, okay, and this is the price from 2002 when Qs were $19. When you have a bear market, which is this is the bear market, there was a dot-com crash. That's the COVID right there. And we had this 2022 crash. Sorry, the bear market here was not a crash. This percentage decline is bigger than the actual COVID. Okay. When you break is when you is where you start a bear market right here. This is where the dot-com crash was, right? When you take out this high is where you had your crash, you're gonna make a lot of room to the upside. Okay. This 261.8, which is this 3 versus 1, that's on Qs, right? So this is your wave one. That's your wave two. It's pretty steep down to this 78.6 against this 5-way move. And we got this monster run, okay, that went up to 161, exceeded 200%, then went to 261.8, and it went to 261.8, which is this fib time that you see right there, 261.8, ends right here in December 2021, right? And the market put a top right there, right almost there. There we started a bear market, okay, that lasted several months in 2022. And then when you use this low to the COVID low to this low, look where the price was. So how could you possibly say that there a market top is here that you haven't even break it? Like you gotta break this line first. This that connects your two bear market lows. Okay. That's gonna take months, though. Don't get too excited over that. So this is your dot-com low. This is your 2022 low. These are the only two bear markets that we had few sessions here, don't get me wrong. Like some of these dips. This is the COVID crash right there. These are the largest percentage decline. So largest percentage decline happens where? In wave two and wave four. Nowhere else. No correction in between from here to here, okay, is larger, is bigger in size compared to these two. That's why this wave count looks so clean and so good to the upside and just keep going up, right? So the point is that when you have wave two, when you take out this high right there, look how much room do you make to the upside, which is going to be your wave three, right? Which is fine. But then here, this bar in January of 2024 is where we started the year, this year. You gonna tell me, or somebody's gonna try to tell me this, that you take out this bear market top and you just only stays for 1 year, and that is gonna be a wave five? I don't think so. You don't take this big of a, I mean, it doesn't mean that you cannot come back down to retest the 400 level again or something, but that doesn't mean that you're just gonna, this is the top. It could be, I mean, you wave for the wave five is going to be very, very short, okay, compared to one. But your equal distance for the distance travel in wave one with wave five with a 708. That is my target for Qs. And I'm gonna stay with my with this print, 700 print on Qs for as long as this wave count is valid. You know, I want to just I'm gonna be keep buying the dips and just uh, try to see over time how I will keep positioning myself and heading toward the 700 mark. That is my target. Is where I would, and ETFs they trades really really good. Is to see is how much of a time and a move that we could make is get ourselves into the 700 mark. That would be the two, this is where the 5 versus 1, okay, meets the uh, wave one. Channel looks excellent. Price is not even here. It's like it's literally. I mean, I can do a middle one here. The price is right there at the middle line of this channel. I mean, poked above, came back down. It just sitting right there. So whatever the case is, okay, from here they take any kind of a bit of weakness, whatever. I'm a buyer on the weakness. That's all I can tell you. This market has a lot of room to run to the upside before I see this one high, this entire fifth wave to complete. I mean, if this doesn't go as a 1, 2, 3, 4, 5, versus if it doesn't go as if it doesn't shape up like this, if it's not going to be 5 way move, and then we can just have to make some sort of a diagonal like this. So there's no way for me to call any kind of a diagonal, because this entire move is way more directional to the upside. It's not contracting into some sort of like a wedge form or something. Well, there are plenty of guys out there who will make you believe that this is it. They just go like this. These are all the beautiful wedges that I'm starting to see so many of them like this. This is what they're doing. Like this. Oh yeah, it's a piece of just, you know. I mean, you can do it anywhere. It doesn't mean connect two lines doesn't mean anything. But bigger picture is excellent. Love the timing. I love the fibs. Just gotta just gonna ride this thing up as long as they can, and as long as the the swing looks good on time, and Mag 7 looks stays firm. I mean, this market has upside to run uh, after breaking out this 408 this year alone. So I mean, it's almost double. I mean, not double, like three. That's a pretty healthy upside on 312. So 5% dip, we're buying. So I don't know about you, but I will. Um, so this entire five that you see right with this, well, I didn't project this thing back to that 700 mark, but this is exactly what I'm trying to fight on this 1 hour wave count. Okay, is to take this fifth wave of this one, this five. It's a different color, but it's the same thing. Is to see 1 2 1 2 in between, is to see if we can get to this mark. So it will. I have this thing for a very long time, but we just gotta have to count five is where I'm trying to fight this to see if I can get to the fifth wave in the next year or two. So that's the plan. So Qs is the most important chart because if as we all know that how much we all love tech. So this is the basket of all the top stocks in one ETF alone. So if we have a good, clear read on tech, I mean, our is going to be much easier to analyze the market and to either, to how, what to make out of an S&P 500 because S&P it's just not going to roll over on its own. This has to cause damage for S&P to um, to move. So that's the cues. Um, Tesla, I know got a position open. Um, Taking a little bit of a drawback here. It's okay. It's a lot of support sitting here. Um, so 1 hour time frame. It's not um a very because you have a gap here to say like how we gonna label this thing. We can just I don't know where you want to put your 1 2 because it's missing a lot of price here. But this is the chart that this one is what I am trying to do. Well, it's all gonna come down to this election because it's to see if the price can just make its way to the upside. So channel looks good. I mean, there's a lot of upside here, but at the same time, we all know what Tesla is. Here's your 299.29. Here is your April low, 138.80. That's 101.81. Now, we did poke above the B wave, okay? But that suggests that this triangle is completed, okay? Because you cannot have a D wave here that goes above B anyways. For me to make a case like, yeah, we're gonna have another E wave to the downside. I mean, if that's the case, then we just gotta have to expand this thing even furthermore to the right side, which I'm not gonna do it. So this is a pretty advanced correction. Okay, you got flat, zigzag to a triangulation here in the Y wave that the fits with that 23.6 and 61. This is the typical ideal retracement mark where the triangle normally completes E wave, 61.8. Is from here the triangle should makes its way back up toward the D wave. When it breaks the D wave, is this where you can open the upside. But this thing right there could take another 3 years. So but this move from here, from this low of 212, is right there, 212, 11. So from here, um, yesterday, I mean, well, when market is going to sell off, everything is going to drag down. So if we put this thing up in one, make this thing as an ABC. Now, ABC, we have 100% relationship at 245. So that was almost met. We have 200% here, 261.8. We have 38.2, which is at 248. We closed the price yesterday at 249. So we're right there into a pretty good layer of support. I mean, the worst case, if it gets down to 240, 240 is going to have this low is where the price opened. Okay, for the 242 mark. I believe that was after earnings, I believe. And then from here, we should make our way back up to see if we can break this channel. That would be the one that could make the move back up. So that again is going to be all dependent on election as well, because the way he is after, the way he's campaigning for him every single day, and which giving away money to people. So this is where Tesla stands for now. So I'll give some time to see. Um, I'm going to be watching this zone to see if we can just make his way up from here. Um, I don't know if this is two. This could be all a one. Then you got the bounce. Then you can get a little. You can go a little bit more sideways as well. But 273 is the upside, and here we have is 242. And then hang on for a second.
So Mo, I think it's Hector Patrick asked if we need to hedge Tesla just in case Harris wins.
Say it again, sorry.
Well, I think it was a Hector Patrick asking if we should hedge Tesla in case, in case that Harris wins.
Can you sit in here playing games and I cannot even hear it? Let me see if I can, because the sound is coming through the one of the monitor. I don't know. Hang on for a second. I had him through a speaker. Okay. Okay, say it.
Yeah. So I think one of the members, I think it was Hector Patrick, who asked if, we should hedge Tesla position just in case that, Harris wins. What
Okay.
is the
I mean,
it gonna affect Tesla if result of the election? Because he's been betting 100% on Trump.
I know. Well, here's the thing, okay? If these are the fibs that we have that we could target, or if we gonna slide, is we're right at 38.2, right? 50 is at 240, 61.8 is at 233, 78.6 at 223. Okay. So if we're gonna start pressing down toward that 240 mark and lower, that means we're most likely gonna start pressing toward this gap. Okay. So we got this 223 fib sitting over there, which is 78.6. And you know that 78.6 is gonna crack. This thing is gonna be back to 212 again. So That is what, but now if I look at the rotation, looks pretty good. Um, so I don't have that, but again, I mean, if we're just gonna bet on election, I mean, we could do is we could do a a port spread. A port spread is for this 240 mark, like yeah, from 240 and 233, or like from 240 to 223, you know, is to see if that would be the only downside hedge that we could possibly think of, is to take 240 and 225 put spread, you know. So if these two, so you just so these fibs right there is your strike prices. So if you, because you're taking a directional move to the downside. So if you're willing, so if we're willing to bet that 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 Trump loses and Tesla, gets impacted by the results of election. So the downside strike prices would be 240 and 225. So if that put spread here, that would be good. So the other thing we could do is to either make a butterfly here. We can do that as well. So meaning that 230, 240, and 2, I wouldn't make it balanced butterfly, because if the price gets out, then you're gonna get hurt. Just make the third leg a little bit shorter. So so you could, let's say you could do 240, and then you can do 230. So that's a $10 wide spread. Instead of making this a 220, you can make that one at a 215, just to make a little bit shorter. Yeah. So no, no, hold on. 225, sorry. Let's see. There's way to hedge, but again, you just playing a directional move to the downside. So you can do a put butterfly and then 2. So this is a 10, so this is 225, not 220. So if you're gonna do 220, so that will be 10, 10, 10. So that will be a balanced butterfly. This way, that gives you more delta. Okay. It's going to be more directional bet to the downside. So if all three of them strikes close out in the money, and you max out the butterfly, meaning all three strikes will close in the money. Now, if the price comes back down here and then it reverses back up toward the 225 and 230 mark, yeah, you're gonna hit a jackpot. Because when you make a butterfly, that gives you a lot of positive data, and you just want to keep $240 strike, which is this 50% retracement, in the money, and you just want to let the 230 and 225 to expire worthless. So the premium that you have for 230 strike and 220 strike is your total profit, and you keep the 240 in the money. That's how the butterfly works. The butterfly does help a lot with higher volatility, because you short twice as many in the middle. It's going to be a 230 strike. So I'm just giving you an example. Doesn't mean you're going to put the trade on tomorrow. So I could I could hedge a butterfly to the downside, you know, against this, but this butterfly has to be less than 50 days, because if you have, I've the trade that I put it on, and I didn't even put any bigger size on them either. I have like 32, 33, 33, 34 deltas. I don't even have 50 deltas on this trade, because I'm not sizing anything up just to start off the month because I have elections sitting in my head as well. I'm not gonna do that. You're gonna have to position yourself a little bit light for now, just to start off the month to see how it goes, and then in a couple days we're gonna throw some trades. Then I'm gonna go right back to the 7,500 delta, trade that I normally do. My what I trade is most of the time is 50, 75, and 100 deltas. All my trades, most of them are structured based on these three uh, three deltas that I play normally on all the option calls. Try to keep it at 50. So the strike prices that I normally take, they're like 35%, basically the 35 delta. 35% is a pretty good probability, like for strike to be in the money, you know? So these trades that I am that I the trade that I did on Tesla is I believe I have like 32. I gotta check 34 deltas on this one. I could add two, three more here just to get it up to a 42, 45 deltas. But I'm still not to my position size what I normally go for, because I'm just keeping it small for now. Because I know because of the elections and stuff. So um what we could do is I would leave this trade, which is out almost, I believe, 50 days, 52 days out on expiration. So the long calls here is out 52 days. If you wanted to hedge, and if we're going to hedge to the downside, we got to go out on this one 25 to 30 days. Okay, you have to be sure because you play a shorter move based on this. So you leave the longs at 52, and then I just talked about a butterfly edge to the downside of 240, 230, and 225. Yeah, I don't want to make 220 because if the price breaks below 220, you're going to start losing money, you know? So at least you have the third strike, 5 points spread compared to 10 on the top. So this is going to be your fibs right there anyway. So you can structure a butterfly based on the fib prints.
So are we talking about like end of November, November 30th?
Yeah, 1 month, correct. So if you have 2 months out calls, so the put will be 1 month out. You want to be sure because you're looking for the inst. So if you're looking for the instant drop, right? So it's not gonna take 2 months for drop. So you're playing a shorter dated puts, but you keep on longer dated calls. You know, that's your hedge because it's the only way you can do it. Then because end of November, the results, the it's gonna be finalized for sure. Who's gonna be the president? And I mean, I hate to say it, whatever. I'm not trying to be more in one side on the other or whatever, because Trump is not gonna accept a loss. He never did with Biden. What makes you think that he's gonna do it this time? You know, it's always gonna say it's a fraud and this and that. We all know how he is. So, but this all depends on the other side. I don't know what kind of a drama is gonna be. I mean, it's gonna be crazy. Let's put it this way. I mean, both sides, it's going to be a very close race the way it's been going, and depends how people go and vote. And everyone's going to say like this is all voter fraud and machines are fixed and they got hacked and this and that, and it's going to be people's going to be posting fake pictures from AI and stuff that this machines were hacked at certain location. It's not letting him pick, is automatically picking, the other candidate. It's gonna be stories after stories. So it's gonna be a wild couple weeks for sure. So I mean, I would highly suggest you not to go crazy. If you did well, protect your gains. It's okay to kind of step back from a market if there's not too much, if like if if yeah, I mean, if you could catch a move, of course the payout is there. But at the same time, I mean, we don't know, I mean, nobody knows. It all depends on how people's gonna go out and vote, and well, little by little, we're gonna find out and who's winning the more electoral votes. So there's gonna be it's gonna be a wild ride, I would say, in the next couple of days. IWM, I don't know. I mean, I'm really hoping, I don't know, something tells me that if market kind of sells off, I don't know, I have a feeling the small cap's gonna take off. But this is, I mean, what it is, but we just gotta have to go with that. Same thing, August lows right there, right here. First swing, second, up, down, up, down. So what do we see here? Here's your high right there, higher low, higher high, higher low, higher high. So we're doing good. This has to hold. If we make if we take out this higher low, which is this 214, this gonna change. This is gonna get change. I need to redo this entire wave count. Okay, so we're what, 4 points off from 214 level. So mark that one on your charts. A price alert from now. I'm sitting, it bounced right from that 78.6 yesterday on a job report and it kind of faded right into the close. So we're right into that 78.6, 100, and to this zone right there. So I have my finger crossed to see if we can hold this and try to recover. So that's the plan for IWM. So comparing side by side price action, we have this sideway move. It has a potential to break higher. It's the same way that we had this move that broke higher. So we have this move. I got the pop right there. You see? So that's the question mark. Can it happen again? So I'm watching this. I don't know, Ruben, somebody was telling me yesterday I didn't post IWM. I was like, I will, just hold your horses.
I think that the IWM is strongly correlated to the 10-year
Oh
treasury.
yeah. Yeah, of course.
10-year treasury yield is going up because of some hedges, big hedges, they are betting on Trump win, and Trump win is going to mean more inflation. So they are buying, they are shorting the treasury.
So meaning the bond price is gonna go up.
No.
Were you
Oh
saying
yeah,
that?
yeah, yeah. Yeah, yeah. No, 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 no. Bond price is gonna go down and the yield is gonna go up, right?
Oh, so you saying that so they're
They
hedging.
they, they expect, well, both candidates, the policies are inflationary, and then US government keep borrowing money,
Correct.
the inflationary. So, hedge funds like Druckenmiller and the Paul Tudor Jones,
Correct.
they are shorting treasury.
Okay. So they're expecting price to for price to rally. Now keep in mind that next week we have a rate cut next week. Did you know that?
Yeah. Right after the election day.
Correct. And there's market is pricing in 99 point probability for a rate cut. It's on their website.
That's right. But is it gonna really move the bond market? Because bond market is kind of ignoring the Fed rate cut. Fed did the first rate cut and
Correct. I know.
it went up because the hedge funds are betting that the inflation is gonna go worse. And then yields is gonna go up, which means
Well, here's 10 years right there in front of you. It's 4.28. Here's your TLT right here. And here's your IWM in green. I have everything here, all three of them. So what do you see here? We made a divergence here. Okay. So rates are up. I'm watching every single day. This is where the divergence happened. Rates were down. TLT made a divergence right here, back in right in the middle of July. Managed to rally. 10 years went down. And now back here in October, they made a divergence again. Now 10 years went up, TLT came down. Here's your IWM that is back in away now. You see right there? Because 10 years are moving up, IWM starting to come lower. It's all here. This updates in real time. I watch every single day. So the support that I'm showing you, this IWM, is sitting right around here, which meaning that it has to it can just hold this low right there, this low. From here, expect if the price starting to move right back up, then that the wave count will come into a play. If it breaks down to lower here, then this treasury is going to start moving up higher. Right now, it still has quite a bit of spread left for them to meet, to hug each other, to make a divergence. If this 10 years is going to diverge with IWM, yeah, the IWM is going to come under pressure, trade's going to take off. That's the bet that people most likely people are willing to make. So if that happens, then the TLT is going to come back down like this. So the 10 years goes up, TLT comes down, so does the IWM. You see how it all works? I have it here. I think I posted this thing a few times on on a chat as well. I'm watching every day. I mean, this is all it's 10-year treasury maturity date with I have this data from Federal Reserve Bank of St. Louis. That's where all the data comes from. I have that thing from there. I mean, it updates every day. So this is what I am. That's where because IWM is very rate sensitive, which we all know that. Because this thing is index is flooded with the with the bro companies. But it's quite a bit of spread left, and I hope if 10 years backs off and TLT starting to reverse like this, and then the IWM can make a move back like this. Okay, because this always gonna like the 10 years always gonna trade inversely to the TLT. Okay, we know that, we get that, right? Is where um we have let me see if I could hide this with IWM. Here. So if you have like here's a divergence right there, right? TLT took off, 10 years went down. This one right there, you see rates went up, TLT came down. Here was a back and forth, up, down, up, down. You see how long they've been from December until March. That was a one full quarter of 2024 of this year, is how the rates were and the bonds were back to back. And then they finally 10-year took off and the TLT came back down. So it's all here. So I know the spread right there, since this divergence happened right here in this month, in October, is when rates started pushed up. Rates are still down. I mean, it was at 498 before, close to that five mark. Now it's at 4.28. And 10 years starting to move up. VIX at 20, but S&P is making new highs and Qs are not making new. You know what, the couple weeks ago, this is what been watching every single day, right? You had VIX elevated, stays at 20. You have an S&P is making new highs. Qs are still off by like 2.5%, 3% from all-time high, but S&P is managed to making new highs. And you have at the same time, you have rates are going up at the same time. Even the fact that after cutting rates. Then couple week ago or so, Europe cut another rate. Bank of Canada cut another. They already did three rate cuts. Three. And we only did one. The rate that we cut, that we did once, right? But inflation is down. Now, after cutting the rate, now the rate's trying to go back up again. So what is going on here is a little bit of a head scratching kind of price action, that certain things really does not make sense at all, right? You have, so that's the rate that were high to at the peak. This is when the inflation soared to whatever, 7, close to 8%, right? So they topped off here, they backed off quite a bit, right? They came all the way back down here to where? 339. So from 339, went right back up, failed, came back. So meaning it made a high right there. That's your low, lower high, lower low. So for this thing right now to come into a play, we need to stay below here. Oh, because it's a, oh, let me draw. We need to stay below this. Okay. This high. We're down quite a bit. I mean, we're going to be fine. But now to close this spread, it needs to come back down here for the TLT to like this. That's the divergence we wanted to see for this bet rates to back off. But these rate cut, the first rate cut that we did is not the 10 years is saying like, screw your first rate, I care less. Then the rates are just right back up. But the point is like, are they planning to keep the rates into a 4s instead of 2s? So you have to think that way as well. If these things starting to drop like this, right? I mean, if you want lower rates means what? Borrowing is going to get cheaper. Borrowing gets cheaper is then what is going to happen? Your mortgage rates are going to start dropping quite a bit. So if your mortgage rate is trying to drop, but there's not that much inventory out there either. There's not that many buyers out there dying to buy homes at 7% rate. This is 10, but 10 affects the 30. These rates, to me, would you expect the mortgage rate to go up to 10, 11, 12%? I think this thing, to me, what it looks like, these rates are just gonna stays around to this 4 mark right here. There's the only thing I can think of right there. Why? Is this because all of these divergences that you see back and forth, they're all happening here at that 4 rate over and over again. These rates will stay where they are. They want to keep it that way. A lot of people that which are they're hoping for the 2% rate to come back. I don't think so. They keep the higher rate. Inflation has dropped, right? God, who knows what the real number is, but inflation has dropped, right? But these rates are right there. Where do you see? Why don't you see these divergence happens up here on the top or up here on the bottom? Why they're happening right there at the same level over and over again? Read the chart. It tells you everything that you can make again, like you can make the case to see what you've been seeing. Look how much time that you've been looking at since January till November. That's almost like 6 months. No, more than 6 months. 9 months. Got three here, and three. Yeah, almost 9 months. So this, I'm watching every day. I'm just like, I was talking to my wife the other day. She's like, "You think the rate's gonna come ever down?" I was like, "I don't think so." So they're just gonna keep it that way. I mean, I hate to say it, but this is a fixed market. There's so, I mean, look, I watch a lot of price that you cannot even guess or cannot even imagine what I do all day. Okay, I analyze a lot of market. This market has been programmed really, really good. Okay, whoever is running, I mean, I always says like whoever is running it, they're doing a pretty good job. This is this is just something is it's just programmed really good. How like everything moves around exact to the certain time, and it just keep repeating that thing over and over again. But most of the people attention, they're focused so much on one directional move all the time because I want to go up, or I'm bearish because I want to come down, because they just did their mindset of every trader is is like this. They just have that I'm bullish, I'm bearish, I'm bullish, I'm bearish, which I totally get that. That's what market is all about. It's about being bull, about bears, right? We all know that. But there are so many ways that you could, when you sit and analyze the market, when you try to see where your turning points are, that is way different analysis which you can come across versus just sitting with taking a bet to the upside or to the downside, because there is a lot of time that the price can just stay sideways, but at the same time a lot of people were still focused on just looking at the chart thinking like, yeah, this thing is going to break out, but that just doesn't give you the breakout, and it just keep extending and just keep buying time and just staying sideways as long as it can. That's why those longer consolidations, they last for several years, like the gold did, right? Gold was sideways for 3 years. Well, okay, well, if it was sideways for 3 years, hasn't made any big downside move or to the upside, where you think your odds for gold to breaking out is to the upside, right? But the point is like, can you be patient, or to stay with, say like, hey, I'd be willing to hang on to my position for 3 years. Do you have the stomach for it? I'm long gold. You all know that. I have IAU ETF for when gold was close to like 700 an ounce. I still have it. I suffered 3 years. And I was like, okay, I mean, this is one of my positions on a portfolio that I'm willing to hold. Okay. And, but I will be trading everything else. So that's how you, you hold like, you know that there you're going to enter a consolidation phase that is going on for 2 years. It can go out another year. Would you be willing to hang on to it? You know? So if you have a big huge uptrend, could be a fourth 1 2 3 move, okay, or could be anywhere, whatever way you want to count. And then if you're gonna have this kind of a consolidation come into a play, okay, that could stay 1 year, year and a half, 2 3 or 4 years, Gord says. What do you think your odds are for this to breaking out? I would, if I have to make a bet on a long consolidation that goes sideways, that has a pretty good odds of breaking to the upside, not to the downside. Because if you look at most of the charts on a bigger time frame, and when you look at consolidations over time, they they do break higher, not lower. If some of them they do end up going lower, they will go a bit, they will give you a bit of like a what they call false break, but they just reverse right back up. I'll give you a perfect example here on Bitcoin. Okay. Here. What do you see here? Here's a Bitcoin low at 38,460 for this year, January 23 of 2024. Bitcoin made a massive move to the upside all the way to 73,803. Look at this consolidation. How long it lasts? You're talking March, okay, right in the bottom here. So you're talking about March all the way up till almost here, October. And look what Bitcoin did. So you had this consolidation, right? So this is for March. Here's your May low. That's your top. Here comes down July. Here goes up your top again. Look what it does. It gives you the false break. When you have this, but you now the thing is this, you have to look at this, like how long that look at this entire move on to the upside. And then you had a price that just keep going like this. Can you count this thing as an 8 wave move? No, you cannot. How can you possibly think that this is some sort of a 3 way move or could consider as a trend move? No, it's not. We need five at least, right? Can you count anything here? Five? No. Can you put a WXY or ABC? Yes, you can. That's all you can do. It's a 3 way move. It's a three swings. Three swings is a three-way move on an Elliott wave as well. So here goes your false break. And look how sharply it reverses to the upside. Look from here, from 49,536. From this low, look at this move. Rips it right back up. It just went right back inside the channel. This is what I show you guys all the time. These channels have a very excellent way to trade the market as well. Some of them some of they call mean reversion. These throwovers, okay, this throwover that you saw, this fake out. Watch this. It's exactly the same thing. And I know this thing for a fact because I've been doing this for a long. I know a nature of a price, how it trades. It's the perfect Newton law. Okay, you get the opposite reaction in the same way, in the same magnitude and length. You got one throwover on one side, you're going to get the same throwover in the opposite direction. Well, it takes time. It has to go and hit that mark. It's gonna to the upper side. that's where you're gonna have your resistance. That's where the price is gonna fight. It's gonna is for several hours or several days. Then it's gonna clear that zone. It's gonna give you the same breakout because you have a same opposite reaction to the upside. Is Bitcoin is bearish? Absolutely not. This thing has insane upside, to be honest. Bitcoin is gonna go nuts. This isn't a first swing. So I'm at $1 million here for this up here. And I reduced, I still have few left. I booked a lot of profit on that one. But the if we do get the pullback here, okay, that was going to be a second swing. So when this second swing will settle, it will take time. Okay, we have a go signal here, which is good. So this is good. And then if we do get a pullback here in a second swing, and then from there, we'll look for a third swing to the upside. So it's going to take time. There's nothing is going to, Bitcoin can come down under 2, 3, 4,000 point. That doesn't mean anything. It's not going to change anything. But I'm really hoping, okay, that the price should not go back here inside the channel for some time. It need to make some room to the upside. And I'm really hoping to get to 80,000 because this is a 127 extension. Because we already broke 78.6, we already cleared 100. Now we'll put a double top here. Good Lord. So we have a double top here. So where the price backed off for 2, 3 days. It's gonna break. It's gonna
Oh,
break. If it so now this thing right there is starting to show me a same price as this. You see where the price came right back to the top. So it's the same thing here with this Bitcoin. Now the Bitcoin is a double top. Double top is gonna break. But now the question is that can it settles back down toward the second swing? It can. But if you look here, okay, it's starting to lose some of this momentum here on the RRG. So Bitcoin might be have a little bit more to the downside weakness here, because if this thing's starting to come back toward the weakening quadrant, it looks like that it will, because this is starting to point toward the weakening quadrant now. So if this thing's starting to go toward the weakening quadrant, then the price is going to start coming down for sure, because you're losing momentum. You lose momentum, this thing is gonna work. But at the same time, when you look here, that weekly side, weekly is good, very good, excellent northeast direction heading toward, this has an excellent 45-degree angle. What angle is 19.29, ROC 9.13. Distance is 2 point. It just needs to get away from a little bit more, away from the benchmark, the center point. Further and further you away, more alpha do you get. So, I mean, either way, we have a double top. If the price do back off, okay, and then we'll see. I mean, the only thing we could do, take this high to this low, and then look for your fibs. So we're right there at 23.6, 78, 626. So we're almost there. So if this breaks, then we're gonna come right back inside the channel that we just broke. After so many attempts, we just cleared this. When you see how many days Bitcoin was trying to fight this zone, and it finally cleared. And then 38.2 is at 65. So this is going to be the downside zone for Bitcoin for now. Oh, jeez, right there. Okay. So if this weakness right there on the RRG, that was, I don't know if I can back this. I got interested in Bitcoin a couple months ago when I saw RRG daily and weekly like this. Just you don't, I watch a lot of rotation. You don't see that. I was like, you know what? I'm gonna about Bitcoin there at that price and on the Coinbase. And then I opened positions for these guys at the same time. I was like, this is gonna go. This is gonna go soon. It's very difficult for to match two quadrant on a two different time frame. If I come across which happens doesn't off really happens. If I ever come across a stock that gives me two quadrant at the same time zone, you gotta go in quick. It's gotta go in. It's gotta because that quadrant from lagging is going toward the improving anyways. That is what you want. And you want to be further away as possible from the benchmark. That is going to give you that alpha that you're looking for. That's the money that you're going to make to the upside. That's why I got so interested in the Bitcoin. And you guys know that I hardly ever covered Bitcoin, right? And then I just like, and then every day after the close, I start putting Bitcoin futures. I was like, okay, here's the levels. Let's trade. So it's the only way you're gonna trade is either gonna be a futures, you're gonna just buy it through a Coinbase or whatever you wanna, how other you wanna buy Bitcoin.
Can
But
I
then
ask,
at this same, huh?
can I ask a question?
Yeah.
So when at what price point does the swing to print in this chart? Is it
You
that
need
it
you need
goes
look.
below four, swing four top, or I just because it's not clear to me when the swing to prints.
Oh, swing two is gonna print, but well, the okay, you have two ways to look at it. Okay. Right now, this is the ATR, average true range, based on this entire swing that we just had from this low, from the fail swing to this one right there. The ATR, which is the average true range, has the expected downside move of 63,758. It could change on Monday. So it doesn't mean that it will stay as is and then the price is going to wait for the price to come back down here. Your job or my job is what is fibs. Remember, we're good with fibs, right? Fibs is everything. Bitcoin is really good with fibs. Okay. And just remember that. It will give you the exact print to the penny. If so, like could be shy, like few points, give or take. It works really, really good with fibs. So I draw a zone for you. You have this swing, which is to the upside. This thing can reverse right back up toward again. I'm going, I'm long Bitcoin up to 80,000. Why is that? Because if you break 78.6, you remember the rule that I just told you, you're going to have 90% chance the price is going to get to a 127 extension. That is the 127 extension for now. I don't project anything that far because just try to be a little bit more reasonable. I don't want to tell the world, yeah, we're going to 100,000. We'll get there. We'll worry about that thing later. But we need to get to 80 first. If we get to the 80 mark first, which is a 127 extension, that'll open up 161.8 to the upside. I know those upside projections. But I don't need to lay it out for like give everyone a big hope. I mean, you have to go one at a time, you know? So from like $54,000 to a $80,000 target, is it a reasonable target? Look from here, from this bar and up till here. That's, it's all green. You know, I mean, this is days and day, like this is what, from September work all the way up till November. That's a lot of time as well, you know. So the point is like, can Bitcoin comes back down? It is possible, but what I'm watching is this. You see, it's trying to form this hook right there because it's trying to lose momentum now. It could reverse, you know, but if it's gonna start pushing back toward here, toward the weakening quadrant, I'll have a pretty good chance that this thing is gonna come right back toward here to this zone. But at the same time, I'm really hoping that thing can just reverse back up. Why? Because it fought this thing right there. It fought for a very long time, as you can see, to break this line, and it finally broke. I was like, if this thing's trying to break, if the price comes right back inside toward this thing right there, then these two just did their job finally, meaning that this drop right there, this, and then this second right there has to settle somewhere, which I'll watch. I'm watching every day, but for now, I'm gonna watch 23.6 and 38.2. Worst case is this, that we just look for 50, it's down to 63. That's where this 63, 570, 758 print is sitting, is toward that 50% retracement from this swing low. When this second swing settles, by that time, this rotation will go toward the lagging quadrant. And then from here, we're going to get that print back to the upside for the third for toward the improving quadrant. So pullback of any Bitcoin, these prints right there is worth buying, you know? That's all this thing looks really good, but it's just a matter of you gotta take it day by day, you know, to play this one out. But they're still looking good. You see, like how is this thing is leading and this one both in leading. I mean, this is Bitcoin rotation is something for real. I mean, if next time, God, I don't know when that thing is gonna happen, but if Bitcoin happens to be back again in the lagging quadrant again on both time frames, I'm watching every day. But I mean, I'm gonna load the boat again. And I'll go heavy long if I ever come across Bitcoin the same way and the same, or you know, the rotation graph at the same time. Those are one of the lifetime opportunity. Um, few things. That guy was asking me about this RRG. Let's do this. Okay, let's do an RRG. You know what? Hang on. We'll keep this one here. I'll do it on a different way on the stocks. Um, few things here. Um, these pink boxes, I was working on them yesterday. The time box. So the time box is used to create a visual reference of time and price movement located within a selected period. This can be useful when trying to identify trends that use time in their calculation for important reversal dates. When placed on a chart, a box is created around a selected amount of time and price history. Okay. These are the GAN they use as a time boxes that calculate the time and price. So what it does, We have 58.78.46 high. We have 46.82 low for this year. What you see is like when you see boxes are stacking up one after another, okay, you have an uptrend. This is just the excellent way to look at the price. You want boxes to stack up and up and up, right? That's what the uptrend goes. And the box is starting to roll over, okay, that's when you're going to have a market correction or downside is going to come back to the play like this. You see, boxes are starting to stack lower month after month. So these boxes right there, they're for 1 month. Okay. This is the excellent way to visual a price and time right in front of you. So here's January. We start the year. Here comes, oops, what happened here? Here goes, here's your February right there. There's your March. April came back down here. May went up. June went up. July went up. August we took one down, but it reversed. September went up. October just went sideways, you see. It made a high, don't get me wrong, but then it just closed out flat. But the point is that when you look at each month, what do you see? See, all these boxes are taking out these highs, right? There, here you have that double top. So you have a double top right there for those 2 months. You came back down here, held again, you stayed above February low, and then from there, in May you made a new high. You took that double top. I've told you this thing many times before. Double tops in the market on an ETF or an index will get taken out one day. It's the matter of time. Mark my words and write it down on a piece of paper. Okay? You can get the drawdown. Market can form a double top. It can make a move to the downside. You can find the fib level where you can find the support. Market will rebound, will take out that double top. Okay? Then the box went up, 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 took another down leg lower. August didn't make a new high. It made a new low. September made a new high. October made a new high. Now we have 2 months left, meaning we're going to have 2 more boxes. All right. So so this is 1 year, which is what we did. And now we go back to last year. So last year, same thing here. January, we started here. 39.74, January 3rd, 2023, January up, February up, March was down, April up, May up, June up, July up, and then from there we went 3 straight months of lower low. Then the box went up, took out July high, September high, made a November high here, and then December high. That's where we end the year. You see, looks good, right? Because you're visualizing right now a time and price in front of you, how the market trades each month. Now, November is one of the strongest months of the year based on election seasonality and the overall seasonality as well. November is one of the strongest months, okay, based on seasonality. Remember that. Now let's go back into November and see how November performed. In 2023, November was up 9.56% in that box right there. That's massive room that push the November had. In 2022, it was up 10.95%. So last 2 years, this is 2022, this is 2023. Now in 2023, it's 4. The box hasn't appeared yet, but it will from tomorrow. Okay. It's a monster move for November. Can we expect November to be the same? Now, if the last 2 years of the market that has been done so well based on seasonality and then based on the, like if you take, um I don't know if some of you, there's a guy, the big guy, what's his name? Once at that Carson, he posts stuffs on Twitter all the time. That good dude is huge. Um, whatever. The guy works for, he posts data. So he sits and puts them into the system that goes back, tracks market performance, how market did after elections, and if the market was down X amount of percentage, then how much it performed over the years, this and that. But the point is, that's all. That's fine. Um, Now the thing is, like this November, okay, is considered as one of the strongest month. You can see it here. Okay, you don't have to look at any data. I'll show you everything on the price. So can we expect the November, which is being one of the strongest month of the year, to perform the same way this month? There is a pretty good chance it can. Can we expect another 10% pop to the upside? Totally possible. Is this election is looking for the market to move to the upside? I mean, that's I am hoping for. Does my wave count tells me the same thing? Yes. Does the cues are telling me the same thing? Yes. So I have from the last 2 days, this is where I'm trying to put everything together, is to see like how I could take seasonality, how I can take November, how I can fit my wave count according to it to see if the price going to give me that month, which has been so promising over the years of the market history. I hope you get my point. Okay. But if you think that the market will reverse 10% to the downside this month, so that means that over the history of the market that it has, which is meaning that November, which has been the strongest month of the year for decades, okay, happens to went opposite this month. So that is the mindset, that's the risk that you have to define this month, okay, in order to play which side you want to play. But for now, as we went through this, we went through this, we were looking at a few other things. I mean, I'm trying to put everything together to see what I could make out of November, how to position ourselves, but at the same time, this election um, is just kind of put you off and kind of put a little bit of a fear, thinking like, yeah, if I position myself a little bit to the upside, what if I get uh, the flush out? A flush out means that doesn't it doesn't mean that you're gonna go up. S&P is up 20% doesn't mean it's gonna wipe off everything in one single month. So we have some serious support sitting here as well. So not gonna crack all this in a quick flash. So that is what I wanted to show you this slide to see what to make out of this. I'm I'm hoping, because here's the thing about all of these in order for this wave count to continue to the upside, if you need to get to a wave 3, meaning that this 3, if I have to slide this thing down, it has to get to at least 5964 of wave one of this. Okay. What I mean by that is this: if you let's this say this is all of the 10% drawdown that we had. Okay. If we're gonna count our 5 waves to the upside, this is one, this is two. Then if I'm gonna make a case of this as a third wave, it has to come to at least 5964. Okay. Because of wave three, which is I have it up here, this is a little bit more aggressive wave count. Okay, so just put that thing in mind. This is not gonna work this year either. It's gonna go into a next year. This third wave, which I have it up here toward this 161 point, it needs to come to at least 100%. You cannot have a shorter three that ends here, and I will put a stop loss, which is a wave count invalidation here for wave four. If we do that, meaning something like this, it's going to be very difficult for me to measure this fifth wave because you're going to have a shorter three, okay, against your one. So I don't need to, you see, like if I try to make and try to turn things around, it's not letting me. It's just, I've showed you diagonal, still gives you the fifth wave to the upside. I showed you that we have incompleted 5 waves to the upside. If we try to force this thing into a 5, is still we're still short of shy of this number. We need to get to this. The ideal spot for this third wave is this 161.8. That's our golden ratio. 6340. That would be the ideal stoppage point for this wave 3 to end. But for this 3 right there, you need to count somehow 5 smaller waves to complete one third wave. Then you get the fourth wave. There where you're going to put your stop loss right there, which is going to be your wave count invalidation. That's your fourth wave. Then you get another 5 wave to complete. That's how you're going to have your completed 5 waves. But I'm just way, way, way ahead from this. But I'm just trying to show you how the wave count works. So that this is the right way to do Elliott wave. Not that idiot who's making this. Look at this 3 compared to this 4. And this looks like a diagonal. Here. So this is a diagonal. Huh? Where's the 4? Yeah. Somebody can just ask a person, how can you even make this diagonal when your fourth wave has doesn't even end up there? Watch these lines. Let me show you this. Let's assume this is a diagonal. You have a 1, take this high, and this is your 3, right? Put a line like this. Now you take this 2 to your 4, which doesn't have an overlap. When did diagonal has ever become like this? That ends. Diagonal should have, if this is the case, the worst case, if this is the case, okay, you get this throw over here. You don't get another, you don't make another higher high. You see, you're gonna try to force something which clearly telling you then not to do it, right? The system will tell you the same thing, but you're gonna do it, but then you convince everyone like, no, this is a diagonal. It is not. This is a clear 5-5 moves to the upside. I'm gonna show you this one. This is the same time, the time box, but I did this one with quarters. This is each quarter for this year. This is the first quarter, 12.44%. That's where we start the year. Okay. So that's one full quarter. That's a lot of time. 12.44. Second quarter was, this is the low. I only marked the low to the top where the quarter end. We can do this. It has a low right there, 49.53. This was April low. And then we poked right there, 6.88. It's the exact print. That's the second quarter. And then from the second quarter, we rallied way back, and that's where the third quarter started, right there. This is the low right there for the third quarter, rallied up to 12.66%. Now, what I want you to see is this. First quarter, third quarter, upside match is exactly the same. Second quarter was 6.88%. We are in the fourth quarter right now. We're only 1 month into it. We have 3.60% exact so far. Okay. And I understand we have 2 more months to go. So, what are we doing this quarter? First quarter started. Second quarter, the box went up. Third quarter, box went up. The fourth quarter, the box went up. So, on a quarterly basis, okay, you have a higher quarterly bar. So, okay, remember that your quarterly bar is higher. Why? Because already has made a new high. The only way this quarter to invert to have an outside bar is to come and take out this low. You talking 51.16, 51.20. So you're looking for this quarter. Now we have 2 months left. Okay. You're looking for this price, which is at 57.28 in the next 2 months, for the quarterly bar to become an outside bar with a 10.64% drawdown. S&P is up 20 something now. From 20, you're cutting down to 10. So once it becomes an outside bar, then the price, it's just a matter of where the price is going to close. So you expect that. Okay, so if you're going to take a 10% drawdown here on S&P, it will be double on Qs and NDX, because NDX is always going to come down more, right? So you expect this for the next 2 months, okay, to NDX to go flat year to date and S&P to take 10%. The 10% on S&P is roughly 18 to 19% on Qs. Qs always going to come because it's the high beta ETF. Always going to come down more. So you expect that. Okay. Now remember, November is what? Is the strongest month of the year. And if we think this, that like the November is going to become the worst month of the year, then we can expect this because of the election outcome. I just don't see it. I don't see it. I don't see Amazon and all these stocks, they're 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 just gonna get washed out in the next 2 months. I mean, I don't know. Anything can happen. It's very, very hard to believe like what the market history is, what the data is like to make a case. I mean, I'm not saying that we cannot come down to 56 or 5,500. We can. We can have another 100, 200 point drop, but I don't expect a 10% drawdown in a matter of 2 months. Okay. So that's quarters. So we did daily. Okay. And we did this. This is what I was doing yesterday. I wasn't really keeping an eye on that applied material. And then I did that trade on that. It was a small position, nothing big. I was just because I'm just trying to see that what to make out of November. I'm just trying to connect everything. I manage a pretty big portfolio. Okay. So you don't know, a lot of you guys don't know what I do all day. So I need to analyze the market to see RRGs and, like what to make out of the market. It's just I'm always a couple months ahead, just like the market, always thinking to see like how can I position myself for the next 2 to 3 months. I'm not worried about 1 to 2 sessions. It means this drop right there is nothing. I mean, really, what one single session, yeah, 1.5% drop looks big, but it's okay. It's just a session. I can, I will, I will see if there is going to be some damage will happen. The screen that I have, what I follow, what I track, it all tells me. So here's a back-to-back years that we had. Now, the question is now is here's 2023, here's 2024. Okay. So in a 2023, look, the low to high was 26.32%. So in a 26.32%, we had a 9% drawdown and 10 here. These are the two drawdowns that we had. Then this year, we take this low to this high. Look at that. It's exactly the same measured move. So this one took all 12 months, right, to end the year. Now this one right there, okay, went up, call it like 2 months before to end the year. But look at this, is a measured move. Now in this one, this year we had 5.91% drawdown and we have 9.70% drawdown. So now the point is what to make out of the next 2 months now. November, rate cut and election. Job reports are done. 12,000 jobs we created yesterday. Wow, unbelievable. And um, we just gotta have to, what I see is to see how the next 6 weeks, I would say that's about it. I would be, yeah, 6 weeks. Because I'm just gonna start taking things a little bit slow right into the mid-December. Because your volume is not gonna be there that much and just there's no what you did all year. I mean, worried about next year now, you know. Um, if you try to hold like the profits that you have made, I mean, you just have to give yourself a little bit of a break as well. You can't just gonna kill yourself over the market. And we're at 20% so far. So this is a weekly time frame. So the point now is if we have to have a correction, another one coming into a play during election time in this election season, But it's very hard for me to overcome November strength. But we're gonna think and make a case in case if the plan A doesn't work, what would be the plan B? Right? So we would, if we take the last correct drawdown from here to here. So you take one correction high to the previous correction low, right? Because you could expect another correction from here to here, right? So let's do the last one. Then I will show you this one. So you take this high of the correction high that we had to the previous correction low. The price was retraced almost close to what? 78.6. That's where the price rebounds. Okay. This was for this year. I show you guys some heavy technical, huh? If you take this correction right there, which was at 10% to this low, this one went down to 61.8. Okay. 61.8. This one was what? 78.6. Now what you do is to assume the top is here. You're at 54. If this market is gonna roll over, it's gonna come down to at least a minimum 5,400 to the downside. I want you to remember that. Now, this can happen in the next 3-4 months. We can just rip right back up whenever the correction is going to be due. Okay, it's going to come to at least 61.8 whenever the thing is going to start. But for now, let's assume or think that this is the top because we did 2 measured moves. Now you ignore November, what I showed you before, and you expect for this price to take, what would be at 57.28, 5.60%. So it's a 5.60% is a little like close to 5%. So the 5% drawdown here will be approximately close to 9 to 10% on Qs. Okay. So just keep that thing in mind. The reason why is that is you take this, highlight this area in my box. Where is my box? Here. So you highlight this. You take this high, and we already did those ones before. 7, 8 points. There, this one. We don't need this. So this one was 78.6. This one, I've had this. I don't know why the hell I deleted those. 61.8. Remember, market is fractal. Okay. What has been repeated before will happen again. So you have 61.8, 78.6. So the next one, whatever the top is, I don't know that. I cannot tell you this. You are gonna have a minimum downside of 5,400 right to this low. Why? Because it has happened before twice in a row. What has happened twice in a row is going to have a very high probability it will happen again. Okay? It's 5%. You guys can take it. You're going to be a big boy. They always say, big boy, take it right on the chin, like a man. You think we're not gonna buy 5,400? Well, hell yeah. We're gonna buy 5,400 really good. Um, okay. Um, I have a few other things, but I don't think this is the Google. Google got a nice break. Went straight to the 78.6. Boom. Backed off right there. Well, we got the play. Um, been watching this inverse head and shoulder for a long time. Waited, waited, and here's your neckline right there. I was just, I had my ping. I was like, okay, I gotta stay this go signal in place. I was like, if this thing stays in place, I was like, there's a pretty good chance that we might get a breakout. So we finally did. Went straight to that 78.6. Look at that. Right back to the neckline. Well, that's earnings. So, earnings are always tricky. You got the instant pop, and that's what the market sold off. I mean, the Qs were down like, sorry, the NDX was down 400 points. I mean, come on. What makes you think that Google is gonna go up like what, 6, 7 points? The whole tech is gonna be down if the NDX is gonna come down 400 points. So Google, AMD, this pig down 3.77% year to date. It is a valid swing. Doesn't look good. Does not look good. This stock is trading below 200 EMA. Okay. It had a failed swing, had a pretty good, nice pop to the upside, filled this gap right there. And then ever since, it's been just puking nonstop. It came back down, tested 200. Second day, it made a uh, 200. Managed to pop for 3 days. Right at that 3 days when the earnings came, here's your earning gap. Broke the 200. For the last 2 days, it has closed below the 200 EMA. Now, this pig right there has done the same thing here several times as well. So, stock is down 3.77%. Stock is sitting right here now at that decision zone, right there. This 4,100, sorry, 141, it's a 78.6. This is your last resort for this stock, for this price to hold. If this thing breaks, it's going to go right back down to the lows, 132. So this swing right there, what you see as a 1-2, as a 1 because it broke above this high right there. Once it's going to take out this low right there, so this 2 right there is going to become 1. So the risk that you have on this trade If you willing to bet, thinking like this lady, Jensen Cousin, who was making all the promises on the TV the other day on CNBC, AMD this, AMD this. To me, I think it's a failed company, to be honest. I don't even like AMD. It's failed. Just this, there, there are four names, okay, that has the best outcome of an AI play. NVIDIA, Broadcom, Taiwan Semiconductor, GLW. That's it. These are the four stocks if you want to play AI. Nothing else. ASML or whatever, there's QCOM and Micron, garbage. These are the four players. You want to play the AI name. That's the leader. That's these two right there, the top ones. Micron, QCOM, and Lam Research. Yeah. They're just they went up with the hope that they don't have and they have nothing. These are the leaders right there. Four names. This is garbage. Best of the best is Nvidia. Second is Broadcom. These are the two stocks that I would go for. Well, I had a pretty good trade on this one. Just that was the most cheapest play of an AI that you could possibly. That was like all the what they do for this AI, for this data and stuff. I was like, this is the way to go. This sucker is gonna run hard if these ones gonna rally on uh, on the AI name. So GLW was a very. I'm gonna be. I'm gonna buy this stock next year again. GLW. I like this one. It's a very good. It has. I think it's gonna be due for a pullback soon. So I'm gonna buy the pullback again. Start a new position for next year. Had a pretty good run for this, so might cool off for a little bit. Um, MSTR. You guys have a habit of for me to make this 1 hour. No, I'm not gonna do that. Okay. You have morning levels that I post on a 15 minutes for the session to go. That's your job is to follow this. That's all. Okay. It's going to give you the S1, S2, and S3. That's about it. If we break below S3, then I will take a look at the wave count or something that I could look for a look for fibs. But other than that, no. This is your wave count. Now, if this is a 2 or this is a 3 or this is a pullback, it's just it sounds ridiculous, first of all. And I'm not doing this in the middle of a session, you know? It really irritates me. So you have a clean wave count. You have wave 1, diagonal, wave 2, wave 3, a little shy of 161.8, triangulation here in 4, okay, which was right here in between here. So you're 100%. Let's call this 23.6 to 38.2. So right in between here, you have a triangulation. And you have your post triangle thrust to the upside. So again, we talked about this, that if we have a diagonal here, we should be able to have an upside. So this wave one, what I have here is the same swing that I have here on one. So I'm not going to change MSTR into a 1-2 when I have only one here. So if this is going to fall, see, MSTR is right there. So it's reversing as well. It, it was down in toward the weakening quadrant, and then it managed to revert, to went up, and now it's losing momentum again. So MSTR is losing momentum toward the weakening quadrant, so does the Bitcoin. So there's a pretty good chance that MSTR might take a break in November. Okay. So if that's the case, I mean, I don't know what is going to happen, but we're going to track. If that's the case, for any kind of a consolidation, or however the thing is going to unfold, we can just make the same case here for wave two. Second swing on the Bitcoin will give you the same second wave here on the wave two. So the wave two, where do we have our potential support? 218, where we at? Where we at? 245? 230. Jeez, where we at? Oh, it's showing probably an after hour, whatever. Okay, 230. So 218 is 23.6. 200 is going to be the major support. Okay, is where you have the biggest percentage decline. And then 193. So this is going to be our downside zone for this wave two. So from here, at the same time, if that the the RRG is going to be pushing toward the weakening quadrant, and then you could have a bit of this weakness toward this wave two. This is where we're going to buy this guy. I've had Bitcoin. I'm just going to take a little bit of a break on this, but on the weakness here on this, I'm going to buy this one. From here, we're going to throw some diagonal spreads because of pretty high premiums on this one. Make a spread a little bit cheaper. Carry big deltas, and then from there, we can just play this upside. So I'm not rushing anything on it. I mean, I'm trading the coin by itself, but any kind of weakness here toward this 200 mark, we'll buy. What 30 points, nothing. So anything close toward this 218, 193 to 200 mark, that's the zone that I will be interested in buying. And then from here, we would make our case toward the upside. So we have a support 200, resistance 267. So that's a 67-point window for this. Within that 67 points, we should be able to see where we could find a turning point and see if we can do 1-2 to complete to have this fifth, the 5 smaller waves to complete 5, unless this is all of 5. And then we just, I don't think so. I just don't think so. Um, this 5 is gonna go. You don't consolidate for, where is my, 31 days. That's what, 31 days. Oh, come on. Really? No. Yeah, you don't chop around for March, 5 months. So you're gonna chop around for 5 months. I was here compared to this. So April, May, June, July, August, September. 6 months. So you stay in a triangle for 6 months to go up 1 month? I don't think so. Um, I was just gonna say this. Oh, this one. Why have this thing open? I got a bunch of charts open. I gotta close them. This one is. I took a swing on this one, and I was gonna I was gonna target this downside move right there from here. That was that 161.8, but it popped to that 250 mark, which is this 200. And I was just, oh, this is what I was wrong. I thought like stock has a pretty big run. I thought it's just gonna cool off a little bit, but it happened to go to 250. Now it's down to 230. So the lotto was pretty much toast. Just well, it's gonna. I don't know. I mean, it's still as a higher bar. I mean, this stock is constantly making higher highs. Something is kind of a little bit off. Like this company was about to go bankrupt, and this stock was up here to like 376 mark at one point. Here, 376. It came all the way down to 355. And I don't know if this was a short interest or whatever, if they're having the stock or what the case was. And then since the stock went up to $3.55, ever since their business is booming and then everything just turns around, you know? Like, I don't know how many cars they're like selling, or I mean, they buy cars from everywhere and they just, I mean, auctions does the same thing, or individual dealers have cars. I mean, I don't know, their business is just unique, or but all of a sudden, like you had a company that's willing to go bankrupt and it just happens to turn everything around, you know? So this is another one. You see all the oh, what I was gonna show you the what else you want to see? MSD or gold? Well, I already did gold. Did I? Where's that gold? There's gold. Gold has a pretty um crazy zone coming up for some weakness. So I want you to keep in mind right there. Oops, kind of backed up a little bit.
Yeah, can you run the downside?
Right there. This is some Gold can push one. We can make one more push. I really would love to see that. Is because um I have this wave two. I have this wave two connected here with this wave four. And if you project this line up to this wave three, which is at 200%, it's the ideal, typical upside move, 161 and 200. And I would really love to see one more push up to this 265-ish kind of area. Is where it's going to touch that line. Well, it's still kind of off. What is the high here? Oh, we only put 257. So the 257, yeah, I would really love to see if we could oh, go test this thing. But the point is, regardless, I mean, if we do, if we don't, but this is heavy, heavy zone. Yeah, 61.8, 261.8, 161, 100. You see, when you have like the cluster of fibs, they all stack like this. Psh, yeah, you're gonna have a very, very good chance that price is gonna back off. So if you have quite a bit of gap in between your fibs going up, then it's different. Yeah, when you have a three versus one right there of this wave one, two. Where's your wave three? Right there, 161.8. What's the other one? 200. What happened here with 200? Phew. So the entire zone right there is your third wave is gonna gold might take a bit of a breather. It's not there. 250, 271. So that's a 21 points. 21 points are almost a 10% move. Yeah, give or take 10%. So that's a 10% move. What you can do, I don't know if it's just ended yet or you cannot make anything out of. This is still a higher weekly bar. Um, what you can do is this. If this is all of three, I mean, the only thing you can do right now is to run several fibs from here. Oh boy, that's so many of them here. Um, you can run it from here. Get rid of this. We don't need this. So you look for 240 low. Hang on, I gotta hang on. So we're at 38.2 is going to be 50. So we do this. Then, so there'll be this low for this wave four, wave two. We can run the external ones from here. Just hang these two. And we can do one from this low right there. It's your wave two. Yeah. So we're gonna. Why they're pulling so many of them? I understand. Right there. Oops. Well, let's see where we can find. Here's your zone. These two. So we don't need this. Just need to keep this one. That's your zone. Downside zone on if the price reverse, make this thing as gray one, make this one as a green one, make this one as a yellow one. Here, this is your zone. So if the price keeps this high into a place, which is 257.39, this is your minimum downside right there. The yellow one right there. Okay, so just watch it. There's nothing bearish about gold. Come on. But it's gonna be due for a setback. Now, if I have to run 4, now that's gonna be different. Yeah, that is gonna be different. It's gonna give you a way deeper retracement because this one is gonna run against this two. So if I would do this, see, that was gonna put you way down right here. I make this one. I don't, unless I'll give it to you in case if you wanted to be prepared for this. I'm not selling gold, so it doesn't, I can handle this. I don't care. So you can do this. Yeah, so it's going to be this. So you can take a snapshot of this. If this 3 ends here, meaning a little bit shy of this, a little bit of an air pocket here, a little bit shy of this. If you would have, like, if we were going to have a 4th wave to gonna unfold, this is gonna be your downside zone, minimum downside, because gold works really good with fibs. Remember that, okay? So that would be the minimum downside move of this 4th wave. And then this invalidation will go right here, that 191. Okay. So it'll be 1, 2, 3, 4, and then you get the 5th wave. One way or another, I mean, you're going to hit this line. It's just a matter of if you make a move down here, then the way back up, because your 5th wave, that's got room to go. I did on a smaller time frame, but this gold is good. Okay, I think that's it. I told people to buy at 169. Imagine you would have bought it here. It took a long time to play it out, but hey, it did. Posted in a Twitter as well. I've been long gold for a long time. Here, 51.74%, 50%, let's say, give or take. It's crazy. I'm right here, 70.60. I always keep the little banner on my, what I have, entries on my, what I have open. This is 70.60. I mean, God, that was 2008, 8 kind of time frame. So you're talking Big money gets made on a bigger time frame on a big names, on the good names. Just remember that. And Elliott is gonna work really good on on a big time frames. Smaller time frame is a mess. So you talking 264% upside? Well, don't get me wrong. I took this punishment. I took several punishment on the way, but I didn't sell it. I bought it when I was dating my wife. We were, I'll tell you a story about it. Just we were driving to Chicago, and we used to have those laptops that it has those dial-up things. It has those little adapter thing that you can put them on a side, and we had them on Sprint. I used to have the walkie-talkie phone. So I got that in the broad internet thing that it plugs into a side of the internet on a laptop. Because that time we only had those Blackberries. There was iPhones wasn't even around. And so she was driving. I'm sitting in the front seat. We're going to Chicago. I don't know. I don't remember what we were gonna do there. But I was sitting in the front. We're like talking, and she's a gold bug, and always like, "We need to buy gold. Need to buy gold." And I was like, "Okay." I was like, "She's like, do you? How much money do you have?" I was like, "Doesn't matter. I mean, how much you want to buy it for?" She's like, "I'll put 10 grand." I was like, "Okay, I'll put 15." She's like, "Let's buy it right now." And she's driving. I was like, "Okay, I'll open up a laptop." And I went on an account and I placed a $25,000 trade. We were literally driving that time. I was like, I'll put, I said, I'll put 25. And he's like, you put 25, don't worry. Once we're going to get home, he's like, I'll write you a check back. I was like, okay. So about $25,000 worth of gold while we're driving to Chicago. That's why I opened the position. Ever since I had that open position on that day. We're married and I have a kid, and that's the story about this position. And she's always checking now because couple of weeks ago, and I told her, I said, I think I want to sell gold. And every day she's been checking gold prices. She texted me. She's like, "Do you see that gold made a new high? Do you wanted to sell it?" I was like, "Okay." You don't know nothing about gold. She don't know nothing about trading and stuff, but she watched gold now, and she will text me during the day. She's afraid that I'm gonna sell it. I was like, no. I was like, okay, I'm just teasing you. But that's how I have this position. I swear to God. And ever since she's crazy about gold. My wife is Eastern European. Um, she's crazy about gold and just bottom here and held it and I I've taken look. I had a very good run. Look, 163%. I even told her that time, let's sell it, you know, because that time I was just looking at this as a measured move, I was like, let's go with this. I was like, here, you see, that's exactly what I had. I was like, look, listen to me and just sell it. Look, you just take this swing right there to this low. Look, the 100% measured move, meaning the distance travel here is right there, 160. But it happened to went up to 186. It's okay, right there. And then it went up to 185. And I even told at that time because I was into trading that. I was trading currencies, I know I was running these extension fibs and stuff. And I even told her, I said, like, we had a pretty good return. Let's sell this. They're like, no, absolutely. It's not going to go much higher. Dollar's not going to worth anything and this and this. And then from here, we took a drawdown, 37%, from this. No, the whole thing was 46%. That cuts it in half. You know, you just always believe you're like, no, it's gonna turn around. It's gonna turn around. You're like, no. It's like, okay. And then took several dips. And here we have gold did a very long consolidation here and a fourth wave. This was a fucking nightmare. This one up till here, you know. This is where the gold broke up, break to the upside. So the gold was sideways. Where's that time thing here? The gold was sideways from August high of 2020 until February of 25. Look at this. You have this long consolidation side. Where do you think the price is going to go? Yeah, I mean, it's a punishment you're going to take here because you're going to take this back and forth swing. But the point is that when you have a price that is making this quadruple tops right there, okay, came to reject, rejection, rejection, slightly reject. It's he's trying to make that attempt over and over again just to see if it can just clear that, you know. When it does, there you go. And always like it's the ceiling, you know, the price is coming back up. It's gonna hit the ceiling, reject it. Hit the ceiling, reject. Hit it again, reject. It's gonna go one time. It's just a matter of you just gotta time that thing good to see if you can get the clear the breakout. I put it up this thing up on Twitter as well back here in the beginning of last year. I was like, just a matter of one of these days. It's gotta give, this thing's gotta clear. So it's like if this is one, I think it's a diagonal here. One, two, I was like, third is gonna give you that breakout. Look at this entry right at that wave two. Um, I think we're done. Oh man, I was gonna do that RG. Oh my God. I gotta go. I'm tired. I was gonna do this. Guy was asking me about that. We'll do it next week. We'll do a full
What?
but the point is I can show you a few things, but you guys don't have a software to understand how the thing works. The uh, where's yeah, I was gonna do that whole thing, but it's just okay. SMH Sammy's got a go signal yesterday for sure. Right there. 7 swing. This thing right there was, I think I posted this. Look where the mega growth is. I mean, I don't know, man. I don't know. November just looks too good to me, to be honest. This is a daily rotation. Here is a weekly rotation. Look where the mega growth is turning in coming weeks. I don't know. I'm just looking at a bunch of things. So
Mo,
look,
is healthcare RRG improving?
yeah. So in the sectors, look at this mega growth, QQQ. Look where they're going. ETF. This one is weakening. Look where the semis are. if semis can push a little bit more on the side, we think it's going to make its way up, right? Dow right there. I think it's gonna. This market is just. This one is. This is a little bit below value, and small caps a little bit weaker. But this gonna turn around. So this is a daily rotation. You see, you have a value here, mega growth here. I mean, again, I mean, I'll see signs if there's. I understand the market can come down another 200-300 points. I totally get that, but that doesn't not gonna change my. I don't think so, because if I'll see weakness in the market. Okay, I will, but I know what to look for. It's just not look at the weekly. Look, weekly QQQ. This is just getting into this improving quarter. This is a weekly time frame. Look at where the semis are. Semis were down, hasn't even recovered yet. Look at that mega growth, where they're going in the coming weeks. They're all pushing toward this improving quadrant. I'm telling you, this market is going to come down. Buy the damn thing. It's going to be a gift. This rotation momentum looking strong for the coming weeks. Doesn't look weak. Everything is here. Right there. So let's track this one. And here's the Mag 7. What mean? Here's Microsoft. Here's Amazon. Here's a Mag 7 rotation itself. Apple is a little bit weakening. Right there. Meta is turning around. Look at Tesla is up there on the top. Netflix is okay. Netflix is still the strongest one out of everything else. Nvidia is starting to came back down a little bit here. What is bad? Nothing. Look at weekly. Meta, good. Netflix, good. Look at Amazon, just pushing toward improving. Let's say the perfect northeast. Look at Microsoft behind it. We think Microsoft is going this way? I don't think so. Look at Google, just forming a hook in for the coming weeks. Apple is definitely weakening. I can see Apple I think it's going to take a little bit of a downside, but it's okay. Gonna recover quick. The Apple weakening on a daily and sorry, daily and weekly. I wouldn't mess it up. Look where this. Look at Tesla starting to form a hook right back up. It was down toward this weakening quadrant, but now it's starting to form a hook right back up. It's not a bearish market. Don't listen to an idiot. This you have to trade. This is everything. I mean, we want to see a push back toward the here's sectors. Here's a sector that I'm going to show you. Okay, one by one, and then we're going to be off. Financials are B weakening a little bit. XLK, you see, that's where the weakness is a little bit in the market. Materials are down. XLE, that's the energy starting to poke. Healthcare right there. Staples right there. Real estate is losing because of the 10 years. It went up to improving. Then XLY is pushing right there because of the Amazon. Okay, communication is good. That's your Meta, Netflix, and Google. Google doing all the work for communication. Amazon doing all the work for XLY after the earnings. So that's this. And what I was gonna do weekly. Weekly, look at this XLK. Come on. Healthcare, no. Consumer, no. Real estate, no. See, they're affecting with this 10-year rate hike. XLY, yeah, XLY looks good. Industrials are good. Materials are good. Financials are okay. Financials are now daily starting to weakening now. Energy is energy kind of, I took a shot on this because of the news broke out and then the gap down. It's just I think energy is just holding out because of the election. I think energy is gonna make a push. Look at this. Lagging quadrant here and lagging quadrant on weekly. Here's the sector. XLY first swing, due for a second swing down. Eventually, I don't know when. Okay. This is XLY. XLY rotation looks pretty strong, so it's is good. Still a full swing. Healthcare down in a six swing, right at that 200 EMA. Okay. Got a no go here. I'm not touching healthcare. Swing is down as well. Utilities, fifth swing coming down toward the sixth swing. Okay. Had a monster run. Utilities might cool off this quarter. Real estate down in a second swing. Okay. The real estate is right there. So is rolling over in this where the second is still a second swing that will give a push back in a third because you have that's a field swing, that's the full swing of the real estate, and that has the pulling second. And this second is gonna come a little bit more. And we're gonna buy the American Tower again. That's the best hedge to play with the real estate, a stock to trade. Consumer staples down in a fourth swing, due for fifth. Technology down in one, working his way down in two. Whatever the thing is going to settle is going to go up in three. I'm bullish on this market. You can, these swings are all up. 1, 2 industrial, due for third to the upside. Financials, fifth swing is, this look is backed off right from that 127 extension right there. Financials are good. Fifth swing. Look at the size of these swings. You know how long this swing has to go down to take out this low of the fourth swing for the swing to get invalid? Financials are good. Energy is on a 1-2. I had a no-go here. Got back. This is a 200 EMA. Is fighting this one. It rejected yesterday again. Hard rejection yesterday. Out. This is the outside bar. Outside reversal bar. Right there. Huge outside reversal bar. It's due for a third. It's due. I don't know. I can get one push here. I would buy energy again, to be honest. I like this one. But at the same time, I'd like to play XOM, Exxon Mobil, but they just had their earnings yesterday. Yeah, Exxon Mobil did the same thing. I'll put a huge outside bar. Communication is good. Meta, Netflix, Google, holding up. Material is pulling back in second. You see, like, if you go sector by sector, okay, 1-2 swing, material, due for third. Communication, third. Yes, whenever it's going to come down, it's going to be a fourth swing, will be up for fifth. Energy, already at 1-2. Financials, fifth. Industrial, 1-2. Technology, going to be 1-2. Consumer staples, 4. will be 5. Real estate, 1, 2. Utilities, starting to take a bit of a breather. Healthcare, 6. The XLY, any will be another 2. You see how many of them are in 1, 2 right now? That's one of these are your sectors. That's every stock that you own is in that sector. You need to know your 11 sectors for your stocks to perform this. So you're gonna get a good read on these swings, on these on these sector swings. That's how your stock is gonna move. The Amazon move is gonna look how Lululemon was moving yesterday. Is why? Because of Amazon up 11.90% year to date. Healthcare up 8, utilities 23. See, utility had a massive run. XLK is right there, 16.33. A defensive sector in a market with no fear has been outperforming the market. 23, outperforming tech. Utility is a defensive sector. Is right there. Consumer staples, healthcare, and utilities is your defensive sector. There's your growth, communication, technology, and industrial, along with energy. Energy can be here, there, doesn't matter. Here's your material, financial, consumer discretionary, and your real estate. This is the game of 11 sectors we play every day. Now the XLK here, yeah, you can see this because of the sell-off that we took, that we just had. But a lot of these ones are into this 1-2 swing. I'm just gonna have to sit and work on them and to see if we could find something on scanning this RRG to see if we could, this 10th decile. This 10th decile is, I gotta go through the whole, it's gonna take me a long time. Um, Applied material, that's what I bought yesterday, just to see if we could, okay. This is your main benchmark. Right there. So your main benchmark is what? S&P 500. Everything gets measured by this, right? So what are you trying to do? What RRG is a relative rotation graph, right? Now, the angles, this card, what are the angles? I'm pretty sure that you learn them at school. Now I teach you in ninth grade angles now. Yeah, when 90% here, 90 degree angle. It's not percentage. Okay. North, south, west, east. North is my brain is not working now. 0%. 3 o'clock on a time. Okay. I am putting percentage over and over again. 90. So 0, 90 degree, 180, 270. So you have 0, not the percentage. 0, 12 o'clock, 90, 3 o'clock, 180, 6 o'clock, 270 is 9 o'clock. Well, now, what is angle? What are they called? An angle whose measure is equal to 90 degree is called the right angle. An angle which measure is equal to 90 degrees is called the right angle. 180-degree angle, okay, is called a straight angle. Now the 270-degree angle, which are more than 180 but less than 360 degrees, are called reflex angles. So you have a complete angle. That's how you make the full complete angle. 90 is the way to go, right? So which are heading where? North, east is where you have this leading quadrant. This is where you want to get in. So 90 is a right angle. 180, okay, is a straight angle. The 270, because the rotation that you're talking about is basically is what? Is making a 360 angle, right? So you basically move to how the clock works. So the clock works, right? It doesn't go backward, right? That's exactly how this stocks moves around the benchmark all the time. See these rotation, they're coming down, heading toward south, then gonna head toward west, then is gonna heading toward this north, toward east. So they're just circling around the benchmark. So when you look at securities, which is losing momentum, but what you're trying to do is you're trying to find a security that you wanted to trade, you wanted to own, which is further away from the benchmark as possible. If the security is too close, okay, meaning that you don't have enough, the trade is not going to have that much enough alpha. You need to have a wider circle. Wider the circle is, bigger the move. So you want to try to stay away as far as possible away from the benchmark, meaning the same way if the price is going to come, if the price is going to make this rotation toward the lagging quadrant, that's not going to get hit hard. First of all, it is away from the benchmark center point and is making a much wider rotation through the downside. So you're going to have more weakness on that sector or through that stock. Okay. Remember, 90 is the right angle. 180 right there is a straight, it is a straight angle. 360 right there is what the reflex angle is. So you basically wants to make a 360 angle move in any rotation. So now what you do is, now I have this entire system, is to look for a stock, okay, that is further away from the benchmark. So what I have it here is 50 stocks. Okay. Russell Top 50 index. Russell Top 50 index is going to have the top 50 companies in the world. They're all into this, in this, um, on the list right there. Now, each rotation right there is going to give you this information about ratio, about momentum, about the angle, distance. So I'm more focused on distance. Okay, you see it's 5.34, the little banner right there. 5.34, right? So let's take an example of this one. So now let's see which stocks are closer to the benchmark. So what I did here, I narrow it down. Computer does it. I narrow it down by the decile. The decile is like if I'm going to do, so I have 10 deciles, okay, of 50 stocks that I have them in there. It narrows it for you. So now I want to see which stocks are the closest one to the benchmark are these ones: Oracle, J&J, CVX, ABT, and Apple. So now if I take Oracle, the distance right there in the banner is 0.55. See, it matches 0.55. J&J is 0.55. I go here, distance right there, 0.55. It's going to match. So these are the ones that are closer to the benchmark, meaning that these stocks not going to have too big of a move. So when you go to a second decile, it changes to this one. So this is second. Meta, Qualcomm, Berkshire Hathaway, Disney, and Comcast. So these are all sitting in a second decile. So what you're trying to do now is that you wanted to go as far away from the benchmark, okay, is to find alpha. So that'll be the 10th decile. You can do 9 as well, you can do 8 as well. 8, 9, 10s are pretty good ones. These are the ones that I'm always hunting for. So the 8th decile is this one. So we have Netflix, Adobe, Verizon, Coke, and Eli Lilly. Now we see that Verizon is in lagging quadrant, Netflix is in leading quadrant, Eli Lilly is in a lagging quadrant, right? So you see how far away from this one the benchmark. That's why when these stocks is going to take a hit, they're going to take a bigger hit. Okay. Eli Lilly took a pretty big hit on earnings because it's way far away from the benchmark. It's an 8th decile. Same thing with Adobe. Adobe is circling around, but it's improving. It's only 3.0. So now we go back to 9th decile. Is we have Tesla, AMD, GE, TMO, and Merck. So these are the ones that are further away from the benchmark. Look at the distance here on this one, 5.26. Leading quadrant, 5.26. So it's making, well, it made quite a bit of move already. Tesla did. But it's the same thing here with AMD. See, AMD weakness now is more coming into a play is because it is further away from the benchmark now. So what is going to improve? AMD is going to have a pretty good move to the upside. The daily rotation is definitely weakening. Stock is weakening as well. We just looked at the stock. So now that if the stock's trying to come toward this improving quadrant, and then we'll see how it looks. So you can structure a like GE is in a lagging quadrant. Merck is right there. So if I can go to Merck, click right there, chart open up, here's my Merck chart. Now I wanted to see like, okay, here's Merck, like how do, like, okay, so I can see rotation is all good. Well, where I'm gonna find my entry. So I have to see like, okay, let's see how the swing looks. Down. Let's see how the volatility swing looks like. 1, 2, 3 to the downside. Okay. Do we have any signal? No. Last one we had was here. Do we have a mean reversion signal. There's a couple of them are triggering right there. So where do we find support? Here we have a stock. We know the stock is right there. So we're just gonna expand this chart a little bit more. Okay, here, but where we have our support right there. The stock is sitting right at 99 mark. Now either it holds or it breaks below. If it breaks below, you're gonna open more up downside. But for now, this is the third swing. And if it managed to move to the upside, I have a minimum upside target of 110 for now. So from 101 is 110. But again, it's the same thing. Now you're looking for a stock that is in right at the line of a lagging quadrant. Then it is in a ninth decile. It could make a move to the upside, but you don't have any strong conviction for it to consider a trade. The only thing that you have is just a mean reversion. That one is still not hold. That one held pretty good, get you a 8.7% upside. This one for the next day it went down. So I had two of them here. There's two of them triggered here as well. So Mark can see some upside from here because it's been sitting right at that line here because it's very far away from the benchmark because of the ninth decile. Okay. So here you have 99 support. So where else we could find um, support for this swing? Okay, we can run our extension tool. We can take this swing high to this, projected from the second swing. We're right there at 101. So where we have our zone. This is our zone right there. Now we have previous support, 101 and 96.30. So this zone right there, as long as RRG stays in place, because RRG has been coming off it was in a lagging quadrant. But the rotation right there now is trying to find momentum to see if it can make a move back to the upside. If it does that, where the hell it went? If it does that, then you can have an expected move to the upside. So that is your probability game that you try to play every day. So that's, I mean, I do a lot more, but I'm just giving you a basic stuff. So if you wanted to see, I want to go to 10th decile, is this. Now the 10th decile is the ones that are the most furthest away from the benchmark. Which one do we have? WFC 7.11 right there. NVIDIA 5.80. DHR right there. AMAT. That's the one I picked up yesterday. It's in a 10th decile. Starting to form a really nice hook to the upside to see if we can get a bit more an upside from here. Let's take a look at the chart. Here's the chart. Now we're going to do the same thing here. Let's see. Swing is okay. Still green. We're good. Volatility swing, 1, 2. Have a minimum upside target of 200 for now. Fail swing. Didn't break a below from this. That's your high right there. Took out this high right there for the second swing. That's the higher low. I took this trade and I put a stop loss right there at 79.28. Right there. Because if if this breaks, I have a pretty good chance that it's gonna take out this low. It might. I mean, the right way to keep a stop on this one should be right there, but I'm keeping it pretty tight on this one. So the trade that I took yesterday, it has stop loss right there. I put alert right there at the low. And if this rotation right there, come into a play, we should be okay. Make a move to the upside. That's the bet that I'm making on this stock. So 1-2 swing is valid. Swing is fine. RRG is in a 10th decile. Okay, is heading toward improving one way or another. So this trade should pay. So it should be okay. So this is what I do. More than half the time is to look for stocks. I have them all categorized, like, looking for these deciles to see which ones are doing what. And because every one of them has a different swing as well. Keep that thing in mind, like if I would pull up to VFC, you see, that is only on one. I was pulling back toward the second swing. So the weakness right there, the weakness that is coming into a play into the Wells Fargo is going to be into that second swing. So it takes time, I mean, I don't need wave counts. I can, if I could just, that's the trade that I want to set up this trade and put them on a board. Okay, so I'll just go like this. I don't need wave counts. I seriously don't. I just go like this. This. Now I want to do a trade based on how I have that. Do this. I have this one. Draw a risk. Here's your position. Here's your stop. Here's your target. That's it. That's my trade. You know, I can just do all the fib works here. I can just take rid of this one. Here's my 23.6 and 38.2. So I can just either do this from here, play a move up to 187. I can just play a move from here to 193, 38.2. That's my stops. I have a rotation right there that is looking promising, which is in the 10th decile, to show that the market could this applied material should be improving on a bigger, like, we should have an expected good move because it is the security is way further away from the benchmark in the 10th decile. So that means that it's going to have a much better alpha on the move up. So that's the risk. So if I do this all day for myself as well when I trade. I don't need wave counts. I have everything programmed. I've been doing this for years and years and years. I don't need to sit 1-2 count and this and that. So that's how I find stocks. I mean, I can expand the list, but I really don't want to because I like to stay with top 50. I mean, I could change this thing to 100 if I wanted to, and do NASDAQ 100. There you go. It's gonna pull up all the 100 now. See? Now this one is gonna have more because I expanded down to 100. Now 100 in the 10th decile are which ones? SMCI, Team, SMCI, REG, and PDD, Marvel, mRNA, Lulu. See, Lulu is moving. See how Lulu was moving yesterday as well? There's gonna be some days that the stock is gonna make a much bigger move. Because why? Because the stocks that are further away from the benchmark. You need alpha. Just remember that. Alpha is that's where you're gonna make the most money on any trade that you're gonna trade. More alpha, more returns. So the security that is moving around the benchmark is gonna give you that information that you have. All you see visually is like, okay, there's a security around the benchmark that is moving away from the benchmark, right? So that is fine, but you have to have a chart to trade as well. But you can't just blindly buy stuff. If you don't know what the swing is, where the support is, these kind of a things. Then I put Elliott wave into it and things like this, like ASML. Like these stocks have taken a big beating all the way down here. Like if you look at their swings, look, it's in a fifth swing right now. It's ASML. You know, the stock is making lower highs and lower lows. I can see that, but the stock will eventually turn around. It will improve, but you just gotta have to. You see, I mean, just swings are down. So we can do ASML. We have these two got hit because of the earnings. They took a hit on their earnings. Look at this, the KLA F13. Of course, this stock is gonna fail. It had a failed swing in 11, managed to win it to 12, didn't break this low. Tried to make another move back up, couldn't take out this. Look at this, 839. I don't know. I should have looked at this thing before. Fail swings are hard to find, but then when you get the fail swing, they're gonna take a hard beating. 511, 11 swing, came down to 12, didn't take out this low. Try to make another attempt to see if we can take this high. No, high was 839. This high was 833. Look at the rejection. F13 failure on this swing. There you go. That's your one. You're gonna have your two, another three to the downside. When you went up that high on a 13 swing on a daily count, you're gonna take a lot of time for the stock to recover. Here's an SMCI. High count stocks are scary because they're gonna roll over hard one day. It's just a matter of time. This is 1, 2, 3, 4, fifth swing down. Wait, stock is a disaster. Fail swing in 5, 6, 7. Boom, there's your first one, third, fourth, and fifth. Do you want to see a stock? It's just a complete disaster. Look at this one. Is show you something. I think I was looking at this thing the other day. Look at this weakness. Show you this. Okay, let's look from here. Based on month. This is the new month for November. Look at this. 1, 2, 3, 4, 5. 5 months. The stock didn't even have a one single higher bar. Puking nonstop for 5 months in a row. Look at weekly. Finally, yesterday. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 weeks. 9 weeks. Yesterday, it had a higher bar for like 2 points. what you call weakness right there. Look at this. 9 straight weeks. And my stock, how much went up? What are the 54.49 to 57? 2 points. Crazy. I looked at it, I was like, whoa. Yeah, this is the COVID stock. This was a stock just funded by free money and think they're every, horrible, horrible stock. There's certain stocks you just literally, there's Disney. Look at this. 1, 2, 3, 4, 5, 5 months. So you had a higher bar. Last month, it closed the month with an inside bar. Disney might pop. I have a I have a feeling about Disney is gonna go. But it's an inside bar. I know some of you like Disney. Some of you guys like Disney. It needs to break this 97.54 to take out this weekly high and make a room to the upside. So, okay, I gotta go. Yeah, keep an eye on Disney. See if you could put a price alert at 97.54. Oh yeah, of course. Yeah, the Moderna is because they hand them the free money. Fake virus. Just now the stock, all the air is coming out. All the CEO got their top bonuses and stuff. Look at the disaster. You have a stock that fell. Look at this one. There's another one I show you. This fake drink. Cialis. Look at this. Celsius, sorry. Look at this stock. This is a monthly chart. One, two, three, four, five. Straight down. Every single month, this stock is making lower lows. This is a stock that I just started new bar yesterday. It might pop on earnings. I doubt it. 35.83. But look at that beating the stock has taken. 71%. Yeah, it will take several years. Yeah, some stocks are just I have AMD is kind of yeah, monthly is just it already had a lower monthly bar now. Oh, AMD is done for this month. AMD is done. Yeah, this big is not gonna have any upside. Well, it can have upside, but it's not gonna have much of an upside. I already have a lower bar now. Let me do scan to see because when you have a higher monthly bar, you're gonna have a pretty good chance the stock is gonna stay up for the whole month. Let's do a lower bar. How many stocks they had made monthly low so far? Because yesterday was the first day. Whoa. Oh no. Sorry, I got the month. Last month. No. Last bar. 1 month. I can't have this much. You really have this much? Jeez, 92 stocks? Hang on. Oh, Apple made a new monthly bar low. Yeah, 92 stocks has made a lower monthly bar as of yesterday. Yeah, these are not the buys. I can tell you that. No, I don't touch none of these stocks because these stocks gonna have a very limited upside. You can get the upside, but it's not gonna have much. They're very hard to fight. Um, uh, the upside on a lower bars. I know that. See, Apple made a lower bar. This stock made a lower bar. Holy shit. This stock made a lower bar. Adobe made a lower one. Whoa. Yeah, not touching Adobe. Yeah, you're right. Yeah, I run a lot of scans after close to see which stock is doing what. There's a lot of them are these are all 500 stocks in S&P. So these stocks right there that you see, yeah, I'm not a buyer on those. They're gonna have, jeez. Oh, it's okay. AMDC, lower monthly bar. Now, you see, the last month low was 143.33. It took out yesterday. Yeah, AMD is done. AMD is done. See, new bar. Oh, see these stocks right there. But it's gonna update every single day. But so far, these ones are there. So you just gonna have to add more. So out of 500, they are 92 out of 500 has already made a new low for the month. Biogen. What's the other ones? The good ones that we can watch. Copart, find. Oh wow, this one's a strong name. Lindy. What happened here to this stock? This is a very strong material stock. Lindy PLC, LIN. I think it took a hit on earnings. Yeah, the stock is done for this month. I think these stocks, I don't touch them. SMCI, there you go. Done. TXT, no. Wind Resort, no. Exxon Mobil, whoa. Yeah, it's not gonna have. You can you can try to play the bounce or whatever, but yeah, once you take out the lows, yeah, your month is done for the stock. Super Micro, Sherwin Williams. Man, some of these stocks are taking some crazy beating. Public Storage, Pepsi. Oh, look at this one. Pepsi is puking non-stop. 1, 2, 3, 4, 5, 6, 7, 8, 9 months. The stock is making lower lows. Oh, it even broke this low as well. Oh, Pepsi is horrible, man. It's a horrible looking stock. Nobody's buying Pepsi. Oxy. No, no Oxy. Oh man, stupid. This stock took a hit as well. Marathon Petroleum. Okay. Let's do that. How many are actually made higher high? These are the ones to buy. Bar scan. 22. Not bad. Oh, yesterday was the first day, so these are the stocks that I'm going to be interested in buying any weakness and play the upside. So I'm sure, yeah, we have Amazon as well because Amazon looking damn good. Who we have here? These are the ones to play the upside. Lulu, INSEE, Electronic Arts, Delta, Shara Communication, Amazon, Abbott, ABT. You see, you got a higher bar. So we could label the high and low. Yeah, Abbott, Hedge, and Amazon. Amazon had a, Amazon is just needs to clear this 200. This month high, this month high. Now we come another again 200. 200 is a very sticky level. 2 months in a row it backed off. Gotta watch 200 level closely because this idiot Jeff Bezos, soon the stock hits 200, he's gonna start selling. He's gotta pay his bills. Church, CHTR, CVX. Delta is hmm, Electronic Art. These are the stocks is gonna have. Man, this stock is ripping. Let's see. Lulu. Lulu had 1, 2, 3, 4, 5, 6, 7. 7, 8 months. Lulu was puking nonstop. Now for the last 3 months, it's been looking good. It's trying to recover. What is that? Starbucks. Phew, nearly made AT&T. Oh, that is. Look at the monthly run on this one. That's what you call a high dividend stock. AT&T didn't have a one single down month since 2023 of July. See, no red bars. Everything is green. High dividend play, the dividend payer. United. The more will come. I run scans every single day after the bell. 1 week last bar scan. Let's see if we can do some. There's some signals triggered yesterday at the close on the weekly bars on these stocks. This one. That's a go right there. That's a go right there. And this one. So some of these, he just scans all 500 charts on a weekly bar. Wherever the go signals are gonna trigger, it's gonna show you these results. MTD, I don't even know what stock is, ODLF, Tech. But you have to look at a swing count as well to see. Oh, jeez. Oh boy. This stock is gonna get hit hard one day. It's a matter of any week's price. P21. There's another one weekly. Yeah. Cross your fingers to hold this low. That's all. One, two. JB is the JB Hunt. That's a good stock. Church and Dwight. It's a good stock. Fail swing in one. Any weakness on this stock is going to be a good buying. Look at this. 25 swings. See, that's the thing. There's no limit for these swings when it comes to GAN. Fail swing one. This is the one to buy. Church and Dwight. And one, two, three, four, diagonal five. It's going to be some sort of wave too. This is the one to play. Rotation looks good. I'm in a weekly, so. Oh, yeah. That's the one to buy. I'll buy this one next week. CHD. I don't even know what they do. Some sort of church? Church, it cannot be a public traded company. Buy some shares. Rotation looks good. Swing looks good. Oh, go signal looks good. Okay. I gotta go. Streaming from downstairs. All right. I gotta shut the recording off.